Hey, how's it going? Good to see you again. Thanks for popping on by the channel. This is Dapper Dividends. I'm Russ. Thank you for investing a little bit of your time with me. I hope to give you a good return on your investment. Super excited today to share my newest dividend growth company, which I think is very undervalued. It's one that I've had my eye on for a little bit and finally decided to pull the trigger. I think they are massively undervalued, and I don't think the market has figured out where they're going just yet. So I'm excited to share this company with you and why I think that they have a very bright future ahead of them. It is none other than Gilead Sciences, ticker GILD. Gilead Sciences is one of the largest biotech companies in the world. They focus on treatments for HIV and AIDS, liver diseases, cancers, inflammatory and respiratory diseases, and cardiovascular conditions. In 2020, Gilead spent more than $27 billion to acquire 3 biotech companies. 47 on April 17th, 2020 for $4.9 billion. Immunomedics on October 23rd, 2020 for $21 billion. And MYR GmbH on March 4th, 2021 for 1.5 billion euros, as they are a German company, which roughly translates to 1.37 billion USD. These acquisitions increased Gilead's exposure into massive markets like breast cancer, non-Hodgkin's lymphoma, and hepatitis D. So it's because of this non-organic growth, meaning that these are not grown from within the company, but they are companies that have been absorbed by Gilead's massively growing presence. So this, I think, is what the market is not pricing in yet. These 3 companies are going to give them massive exposure into some pretty interesting markets that is only going to be a benefit for Gilead going forward. And as an investor, we must look through the windshield, and this looks to me very, very bright on the horizon for Gilead. Additionally, in March of 2021, they announced a collaborative effort with Merck, ticker MRK, which I do also own, to focus on oral and injectable formulations of lenacapavir and islatravir to provide innovative and long-acting HIV treatments. Gilead is trading at 9.23 forward earnings according to Yahoo, which is rather low compared to the S&P 500, which is trading at about 21.71 times forward earnings. So it looks to me like they are trading at a very nice discount compared to the market. But now my favorite part, the dividend. What about the dividend? I'm a dividend growth investor, so are they growing a dividend? Let's take a look. And we see Gilead is currently paying a solid 4.37% dividend yield at $2.84 a share annually. Their payout ratio is listed at 39.64% on Seeking Alpha, but I calculate the trailing 12-month free cash flow ratio at 46%, which is still very low. They have a 5-year consecutive dividend growth streak and at a compound annual growth rate of a whopping 16.35%. Management is committed to growing the dividend while paying down at least $4 billion in debt, while offsetting share dilution with buybacks and opportunistically reducing share count. If you know me, you know I love to look at the interest coverage ratio. You're probably going to think I'm the interest coverage ratio guy. I don't know why I don't hear anybody else talking about it, but to me it's a very important metric. And it tells us how much money a company has to pay down the interest on their debt. Imagine you. How much money are you bringing in that you would be able to pay the interest expense on your credit cards or whatever debt you may have? They are able to comfortably pay the interest on their debt, as they currently have $9.99 of operating income to pay down every $1 of interest expense. So from what I've seen, patent expirations and competition were a drag to Gilead's legacy portfolio of HIV and AIDS, but that non-organic growth of 47 of Immunomedics and MYR GmbH, I think, are going to just give an amazing boost to their pipeline. It's something I'm really excited about, and I think Gilead only has room to go up from here. And simply Wall Street would agree that Gilead is as potentially as much as 49.7% undervalued, with a fair value of $129.21. And to tie a nice little bow on it, check out this quote from one of their presentations where they say, "At Gilead, we are inspired by the opportunity to address unmet medical needs for patients living with life-threatening diseases around the world." They are global. They have a big presence, obviously, in the United States, and then in Europe, and then the rest of the world is a distant third. They are trying to help people live longer. This is something I can get on board with, trying to help people overcome some debilitating diseases. Fantastic company to invest in. So I did have an initial tranche today. I just decided to jump in, start it. They are a little bit up there, not quite at their all-time highs around the $80 range, but I got in. This is what I do. I bought 3 little tiny shares. I'm going to get that to at least 10 shares. No need to go in and buy them all right away. We dollar cost average in. That's how I'm doing it with Gilead. I really want to know what you think, so follow me on Twitter at RustyRam78. As always, check me out on Instagram at DapperDividends. And as always, and I truly, truly do mean that, expertise comes from you in the community. Yeah, you, right there, you. Please let us know what you think. What's your opinion on Gilead? Do you own Gilead? What did I miss? What did I get wrong? I would love to hear it. Don't forget to leave a comment in the comment section below, because you know where the comments go. We would love to talk to you, and I will talk to you in the next video.